With us now for more is Peter Luis Garnace, Equity Research Analyst at Unicapital Securities Incorporated. Good to have you back, Peter. Welcome to the show.
Yeah, hi Kathy, good morning. Thanks for inviting us.
All right, so the Philippine government off to the U.S. this week for trade talks with the U.S. Trade Department. How do you think the Philippines can be best positioned compared to the rest of our neighbors?
Yeah, I think the government's action to negotiate tariffs is a crucial step towards positioning the Philippines more favorably in comparison to its regional peers. However, a failure to renegotiate trade terms could harm exports, local industries, and the overall economic growth in the Philippines, given the U.S. Significance as a trading partner. So, on the other hand, with the second lowest tariff rate in the region, the Philippines could benefit from trade diversion and increased foreign investment, especially as firms look for alternatives to China and seek out competitive labor markets. And nevertheless, we think that investors need clear signs of compromise that could boost confidence. And I think the government should put everything that they can do to really boost confidence here in the Philippines. However, while setbacks in trade talks may trigger renewed sell-offs in the market and vulnerable sectors,
So, what
and
does
we think
a failure look like, if I may, Peter? If, for instance, they don't get to negotiate, 17% is okay? Or is that relative to what other ASEAN neighbors will get out of their own negotiations? And how do we trade on that?
Well, I
If
think
we
for
should.
instance, yeah, I think for instance, if we don't, for example, if we don't get favorable trade deals with the U.S. That could hamper growth. Let's say, for example, if we just reduce U.S. import tariffs as well, it could also undermine domestic industries here in the Philippines, which may struggle to compete with U.S. goods in terms of price and quality. So we have to really take into account also our domestic industries. We have to protect them as well from the trade
Free
deals.
trade agreement, do you think that's going to be the solution? A rally in the markets if that goes through?
Well, that's something that we're also looking at. That's would really boost economic growth if they are able to have that free trade agreement with the U.S.
Okay, we're also watching out for the first quarter GDP out on April 30th. That's going to be the first look-see into the impact of the tariff policies on the U.S. economy. So what are we expecting and how do we trade before and after it?
Yeah, I think in terms of the U.S. economic fundamentals, the recent protectionist policies that the U.S. implemented, I think the world's largest economy will be at risk of stagflation, and we would probably see a slower economic growth while inflation remains high. So for first quarter US GDP, I think consensus is expecting just a 0.4% growth from 2.4% in the previous quarter. And also, US is set to release its core PCE price index, which is expected to print faster growth at 3% from 2.6% previously. So it will be really interesting to see how it pans out.
Okay, just a half of a minute to go. How do we trade this week then with all that?
Well, we think that we are still cautiously optimistic as we see the market as is likely to remain volatile in the interim. Thus, we are stock pickers in this market. So we are overweight on banks as we see the sector to benefit from a slower pace of rate cuts. And our top pick is BPI as we expect the bank to sustain high ROE levels amid a strong earnings growth potential. We also like defensive names in the consumer staple sector such as Pure Gold and the telco sector like Converge, which are both driven by domestic growth in consumption and are therefore less susceptible to adverse effects of external headwinds amid escalating global trade tensions.
Got that. Thank you for setting up for the full week of this trading week. Peter Luis Garnace of Unicapital Securities.